Today we published the latest edition of Gold Demand Trends, explaining the key shifts in the gold market in 2019. And at the top level, global demand was just fractionally below that from 2018, down just 1% at 4,356 tonnes. And the weakness was really due to weakness in the second half of the year. As the gold price jumped in Q3, we saw jewellery demand really slow quite sharply, and then it stayed quite low for the remainder of the year as the gold price held up at really quite elevated levels. And in some markets, gold priced in the local currency actually hit new record highs, so that magnified the effect. Overall, global jewellery demand for the year was down 6%. Retail investment in gold bars and coins fell 20% to a 10-year low. And that was because we saw retail investors acting in their typical way. As the gold price surged, they sold their gold holdings to cash in on the high prices. But offsetting this weakness in the consumer elements of the gold market, we saw really strong inflows of investment into gold-backed ETFs, exchange-traded funds. Global holdings of gold in those products grew by more than 400 tonnes during 2019. Global geopolitics and low interest rates were the two main reasons underlying these inflows. But once the gold price started to take off, we also saw some momentum-driven investment flows too. And for the second year running, central banks bought more than 650 tonnes of gold during 2019. It was mostly emerging market central banks that were adding to their reserves as they continue to really focus on diversifying their reserve asset portfolios. Those are just a few of the top-line themes from the report. To download the full report and the supporting data files, please visit goldhub.com. Thank you.